Hello, what's happening, everybody? It's Aaron and Alex here from KW in Phoenix. Just thought we'd reach out, share a little bit more on the Shift series, which Alex has been teaching. Picked up a lot of lessons learned. The past 2 weeks actually broke up creative financing, covering both buyer and seller side. So thought we'd share some of those highlights with you. I'll leave that to Alex. We're also going to put two links to those actual videos down below. And over to you.
Awesome. Well, thanks, Aaron. And yeah, to Aaron's point, over the last 2 weeks, if you're familiar with the Shift book, right, the Shift breaks it apart into 12 individual tactics, to that you can apply to your business in a shifting market. And so in tactic 10, there's 28 proven legal like solutions that you can apply to a transaction. And they broke it up into three sections: what a seller can do, what buyers can do, and what lenders can do. What I did notice is I wanted to focus on just the sellers and the buyers portions and solutions, because the lender solutions tend to be kind of in a hotter market, right? Because sellers aren't willing to give more contribution and such like that. But we're probably, noticing across the country, at least we are here in Phoenix, that sellers, are the ones saying, hey, what do I need to do for you to buy my house? And so in part one, in the videos below, in part one, we covered what sellers can do in a changing market. And man, a lot of great stuff in there. I mean, we went over from seller contributions to seller funded buy downs, owner financing, contract for deed. And one of the ones that kind of just really stood out was on the lease option and lease purchases. There was a little tidbit in there that like really is going to stick with me for forever. So on lease options and lease purchases, what do we know, right? Like the seller is saying, hey, I'll rent you the property and you have the option to buy the property. Lease option says you don't have to, but you have the first right of refusal. Lease purchase says, no, it's mandatory for you to buy it. You're saying you're going to buy it no matter what. In both situations, typically the seller is saying, hey, a portion of the rent you pay, I'm going to save that for you towards your down payment. I'm basically going to be your savings account because it's a little bit harder for you to do. What did we learn in Shift? So if a seller is saving money for the tenant, right, the future potential buyer, that the amount that they save must be in excess of market rents. Here's the example: $1,500 a month rent. If the seller was like super generous, they're like, hey, I'm going to charge you 1,500 total. We're going to say that rent's 1,000 and 500 of that I'm going to save for you for your down payment. The future bank that's going to finance the tenant slash future buyer actually would not allow that $500 that was saved by the seller each month to be given to the buyer for their down payment, because it was not above market rents. So again, in the example, if market rents is $1,500 a month, then that seller, if they want to save $500 a month for that buyer, they really got to charge them like $2,000 a month, right? And so that was a huge tidbit, because if it's less than market rent, then now it turns into a seller gift. And both of you probably know seller gifts are not allowed to, they can't help towards those down payments. So that was pretty cool. But so we went over a lot of great stuff in part one. Part two, we then pivoted to what buyers can do in a market. And there was a couple things that, we went over 401ks, temporary IRA transfers, which I think that was actually a really cool one to know. So temporary IRA transfers, a individual, right, and in this case, a buyer, they can actually borrow against their IRA, like pull out funds from it. And if they replenish those funds within 60 days, and by the way, that's a hard line in the sand, 60 days, right? Not 61, but 60 days or less, they actually will not be charged any penalties because they've replenished those funds. And so great for that individual that's like, hey, I would have the money from the house that I'm going to sell after we buy this one. And you want to watch out, you want to be careful, know that you time that right. But great situation where they, maybe they have that $100,000 in an IRA and they can leverage that while they get the equity out of their current house. And so yeah, those were some great stuff that we covered over the last 2 weeks, and a ton more. Just wanted to share a couple of those things with you today.
So just one thing to keep in mind. So no matter how long you've been in the business, it was quite interesting as I was listening to Alex. Did a great job on that. There was actually a couple tidbits in there that it's been amazing just to file away in terms of the knowledge base of dealing with so many different options and getting creative. So great job on that.
Thanks.
And you'll get more details down below.
Yeah, and awesome, and we appreciate you. And if you guys want to keep joining and the rest of Shift, let's see, I just wrapped up week 11. That means we got 4 weeks left, and I'll tell you exactly what we're going to cover over the next 4 weeks. We're actually going to master the market by deep diving into short sales 1 week, foreclosures another, and REOs the third week, and then the very last week, week 4, will be bulletproofing the transaction. And so we're going to put that link below. And by the way, it is at 12 o'clock Arizona time. So at least until November, we're talking that's going to be like 1 p.m. Mountain Standard, 2 p.m. Central, and 3 p.m. On the East Coast. And so you guys are welcome to join on. We'd be happy to have you.
Again, see the link below. And thanks very much for keeping us in mind for all your clients that may be buying or selling in Phoenix, Arizona. And appreciate you.
Yeah, and thank you to everybody that has sent referrals. We really appreciate your trust.